Hi, folks. Today we'll have a short update on the supply and demand investment system, and then we will step across the Atlantic and talk a little bit about some of the developments over the last 48 to 72 hours, and in particular, how the market is reacting to this news. This morning, we made a small adjustment to retirement type accounts. We simply sold one holding and replaced it with another. The replacement holding is focused on companies that are expected to grow faster than the overall market and their competitors. This is a relatively small adjustment, simply following our supply and demand investment system and doing our best to make sure that you own companies that are in the highest possible demand and that you don't own companies that are in excess supply. As it sits right now, the markets have rallied quite a bit on news of the potential truce between Israel, Iran, and the US. As it sits today at around 3 o'clock, it's shaping up to be at least a pretty strong day in the markets, very close actually to all time highs for the US markets at least. I have rewritten this outline quite a few times now, starting with last night, because news just seems to keep breaking. I want to always caution folks to not try to read the tea leaves too much and try to predict what the market is going to do over the next weeks to months. That is simply impossible. And oftentimes we've found that trying to do so ends up costing you more money than just about anything else you can do investment wise. That being said, the market has certainly taken a view of this current conflict that would seem to indicate that the market at least feels that this war, this situation will not escalate any further. And that's why you're seeing, or it's why I believe that you're seeing an increase in stock prices both in the US and internationally. Another tell when it comes to Middle Eastern conflicts is the price of oil. For Iran in particular, because of its access to the Strait of Hormuz, a waterway that carries about 20% of global oil supply, what we have seen previously, at least to the last couple of days, has been the price of oil increasing. So the cost per barrel has risen dramatically. And that has totally reversed itself over the last 24 to 48 hours. The price of oil has actually declined quite dramatically over the last 2 days. That would be a second tell, in my opinion, and in the opinion of most economists, that the financial markets at least think the risk of further contagion or a prolonged war here is relatively minimal. At the end of the day, financial markets are simply ways or simply looking to predict short term outcomes. If the market thinks that the situation's not going to get worse, that's nice for the market. It really does not impact day to day investing decisions that you or we are making. That's part of the reason why we rely on our supply and demand investment system, is to eliminate that level of human emotion and human bias that can occur. Obviously, probably a lot of news is going to continue to break over the next couple of weeks. Simply keep in mind, we're keeping an eye on this so that you don't have to, and please feel free to let us know if you have any questions. Bye now.